welcome to another episode of Sonoma Brain Trust. I'm Daren Blonski with Sonoma Wealth Advisors here in downtown Sonoma. Joining me, I've got my colleagues Chelsie Runnings with Better Home and Gardens and Mary Piasta with Valluzzo, Piazza, and I'm going to mess that up. Mary, why don't you hit that one? How many names do we have now? Like 3 or 4?
Oh, it's only 3 right now. So you've got this, Karen. It's all good.
I got the 2 important ones.
We're all important.
We're all important. All right.
Well, let's go to the markets, huh?
So thanks for joining us. Every week we get together and talk about real estate, the markets, legal stuff, update you on the latest on COVID. We've got some updates with kind of a semi-reopening of salons. Mary's going to dive into that. And we'll dive into the real estate market. First, we're going to dive into the stock market today and talk a little bit about what's happening. I'll take you through a quick market review. I'll take you through a few of the different markets. If you want something more in depth, I post a daily market update. You can check out the links below and hear more about that if you're interested in kind of getting into the weeds a bit more. So this will remain kind of high level. But in front of you, you have the S&P 500. This is the proxy for the largest 500 US-based stocks. And we use this as a market barometer, right? If you imagine the market like a big piece of pie and you slice it different ways, this is one way to slice it. And what you see in front of you is the price movement on a 10-minute chart. I'm going to switch this to a daily chart. So each of these bars or candlesticks represents a day in the market. And so you, in this case, where the bar is green or the candlestick's green, you can see it trades up. That's movement up. And then the wicks are the low and the high of the day respectively. You can see right now this very anemic looking candle is today. And there's some reasons for that I'm going to get into in a minute. But that could be the beginning of what we call a doji candle, which could be a sign that the market's ready for another turn. Let's talk about that. So what's going on in the markets today? I want to go all the way back to February 24th, and that was what we call the breakdown candle. So that's when the market started to really fall apart. And if you look at the high of that breakdown candle, it was 325.85. Okay, so remember that number, 325.85. And if we zip across to where we're at today, and if you look at this red line right here, 325.85, let's go look at the 10-minute chart and watch what the market's doing today. It's trading around 325.85, right? So that tells us that's an important horizontal resistance and support level for the market. Right now, it's operating as support. How do we know that? Because you can see the market and the candlestick trading into that level 325.85, which makes it green. So we've confirmed its support today. Will it hold into the close today? We'll see. That's really important. When we hit the 12 o'clock hour, anything goes. The market can do whatever. But right now it's holding as support. Now, last night when the market closed, you can see 325.13 on the horizontal line. That was resistance. And the market does what it often does when it comes up against a resistant point, and that is it gaps up through the night. And you can see that gap. So when the market closes in New York at 1:15 here, is when 1:15 is when the futures close. The market actually closes at 1. Then Asia opens up later in the day, and then London. Well, during that period of time, the price is actually moving. And when the price is moving, when it reopens the next morning at 6:30 a.m., the prices are up. That's called a gap. So now we've got a gap on the chart. And if you look back, it's been happening quite a bit. In fact, a lot of the movement up over this last few months has been a gap up, a trade up, and then a drop down. And so you can see those gaps right there, gap here, gap here, gap here. Those are all gaps. The market likes to fill gaps. So it would not be surprising over the next few days to weeks if we saw a trade down to close out that gap. And to make sure that this retains its support level. Now, it's going to be very difficult for the market to continue to move forward from a resistance standpoint. what it has going for it is a tailwind of stimulus. So this morning we got a huge stimulus package out of Europe, and the European Union agreed that they were going to stimulate and print money in the billions, and that helped move the market up. Yesterday, we had an incredible day up on the Qs, which is the technology stocks. You can see that move up is pretty substantial, and we've traded off. However, the market still looks in good shape. We call that a bull flag when the market moves up and sideways. So I won't go too deep into it, but it's really to say none less that the Qs are the one driving the market. Technology is driving the market. The S&P is made up of 11 different sectors. And today, everything else is doing really well except for tech, because tech had just an incredible day yesterday. So we're continuing to see a strong market up movement. It's moving as markets do. We have the tailwinds of more stimulus coming. We've got the tailwinds of it appears to be some type of therapeutic or vaccine coming through on COVID-19. So that all bodes well for the U.S. stock market. So I'll leave it a wrap there. Again, check out the more extensive review of the markets on a daily basis in the link below. So Chelsie, incredible real estate market, right? And it's been pretty amazing in the Valley. What are we seeing this week?
So this week, we've actually seen a little bit of a slowdown in real estate. Perhaps that's because California did their shutdown again. People are being a little cautious with going out and seeing things and being around people. Maybe we're just trying to get over the shutdown a little bit faster. So people have definitely slowed down a little bit. We've seen transactional activity slow down a little bit, but that's not to say buyers aren't still out there. Rates actually just went to their all-time lows. They're at 3.03% right now. That's the lowest they've been. And the buyer demand is still strong. We saw mortgage applications were up again for a 5th week in a row. But I think because of the shutdown, that's really affected the activity level we're seeing right now. Pending sales still staying pretty stable. One interesting thing, though, is you guys might remember this back in April when we started these videos. I told you that seller confidence in the market, the sellers who thought it was a good time to sell, was about 33%. We're up to 44% as of last week. So that's huge.
Are you seeing any change in inventory with that confidence shift? Or?
We haven't seen a big change in inventory right now. The concern is that the inventory levels are not going to meet the buyer demand. But I do feel that this feeling of the home sellers feeling it's a better time to sell is going to help us out. The buyer, back in April, the buyer feeling was about 37%, and we're at 40%. So we didn't have as much of an increase in the buyers feeling like it's a good time to buy as we have in the sellers. So hopefully that'll help push some inventory out there and just keep our momentum going. Because we have, first-time home buyers out there who are struggling to find their house. We have a lot of people leaving the cities looking to buy more space, bigger kitchen, bigger entertainment places. So, we'll see. In the Valley alone, though, we've had 33 sales this month in July. We're only, July 22nd?
That sounds like a lot. Is that a lot historically? I know you did those numbers last week, and it was just like 300% increase in Glen Ellen. Wow.
Yeah. So it's actually, we have 125 houses on the market right now. 33 have sold already. I think our average is about 38 to 48 typically.
Wow. Okay.
So we're coming pretty up there. And the median days on market is 38. And that's from the day it goes onto the market until the day it sells.
That's fast, right?
That's really fast.
Right, and that's like regardless of pricing. So it's not like it's taking longer for the $2.5 million houses to sell versus the 800,000.
You might recall a couple weeks ago we talked about the luxury homes are actually selling faster than they've sold ever before in the Valley. That's city money going in. So not a ton of interesting news in the real estate market. We are slowing down just a little bit in activity, but that's not because the buyers aren't out there. I think it's just really because of the shutdown has people shifting a little bit with what they're doing, being more cautious. The California Association of Realtors has not shut real estate down or put new guidelines on us for showing. They still prefer it to be virtual as much as possible. You still have to do crazy sanitation before and after you get in, no touching things, but we're still able to show. They prefer virtual, but we're still out there showing properties, writing offers, getting into escrow, and closing these deals.
Well, that's great news.
Just to support, Chelsie, what you're saying here on the mortgage rates, this is out of the St. Louis Federal Reserve Bank, and they do all these really great charts. And you can see the 30-year fixed rate mortgage, 2.98 throughout the country. So that's pretty interesting. That's pretty low. It'll be interesting to see if it goes lower, given we're seeing further pressure with rates. And you can see this. If I pull up, sorry, I'll take us right back to one more chart here that I think might be helpful for the listeners. But if we look at, because this could be a canary in the coal mine, and this is the 10-year Treasury note. So when the 10-year Treasury note goes down, so basically right now the Treasury is trading at 0.6% is the yield on the 10-year Treasury. Those are numbers that we saw during the initial phases of the COVID crisis. You can see all the way back here, February 27th, the rates in March 6th were down really low. We're back to that point. So that's one area we really watch. So, you know, on the real estate side, we're jumping and excited, but seeing rates drop again like that could be a canary in the coal mine for the markets.
It's interesting when I talk about, like, it's never been cheaper to sell or to buy a house, but then at the same time I'm talking about these house prices, you know, average price being 1.3, 1.5 million, and people kind of look at me crazy. When I say it's never been cheaper, I mean it's never been cheaper to borrow money. So 20, 30 years ago, interest rates were like 20%. A house might have been $300,000, but you were paying 20% on that $300,000. That's what I mean when I'm telling people it's never been cheaper in real estate to borrow money right now. So.
Yeah, that makes sense.
Yeah, it's cheap rates for sure.
Any idea, Chelsie, on the premium that real estate's going for right now, the value, the increase? I would imagine with more demand, we've seen higher prices.
We have seen higher prices. I don't remember off the top of my head what those prices are or the percentage we've gone up, but I do know right now we're seeing homes in Sonoma Valley selling for between $600 and $627 a square foot.
A lot.
Yeah.
That's some expensive square footage right there.
Yeah.
Well, it's still cheaper than the cost to build, which is between like $700 to $900 a square foot.
Really?
So,
Wow.
yeah. Well, for custom build. But anyway, we could go into that another time for sure.
Another day.
Do you have anything about the shutdowns? Give us some good news or helpful news.
I have two legal updates for everyone. The first one is that we're starting to see some more finessing of regulations as it comes between the interplay of health and businesses. And this is through the Americans with Disabilities Act. And I'd like to share an article for any of you viewers who are business owners or interested in this. This is an article put out by a law firm, another part of California. But, you know, in a traditional sense, employers aren't really supposed to ask people about their health, right, or their customers. But now we have this pandemic, so the interplay of that and then the health in general has been relaxed. And what you're seeing is if you go into when salons are open, and I'm going to get into that too, or like you make an appointment with a doctor, they want to know a lot of things about you. They want to know if you have a temperature, if you've had a temperature, if you've been in a high-risk situation, if you've felt sick. But for the regular businesses, some of these things may not really be appropriate to be asking. Some of them are, and the reason that they may not be is because of this American with Disabilities Act. So what this article goes through and shows, it details, I thought it was pretty thorough and as a question answer. And for example, number one here, can employers require COVID-19 testing or antibody testing? And it's, you know, there is definitely a line which is appropriate or not appropriate. And it also depends on your type of business. So the idea is that it's important for business to, I'm getting an echo. Are you guys getting an echo?
We've got an echo. Mayday, mayday. We've got an echo.
But in any event, so let's see. We've got the interplay of the rights of the person and what the businesses can do. And the takeaways are, so if you're a business owner watching this, like really, go back to your reopening protocols, make sure that they're in line with the structures we've talked about, the county level, the state level. And then when we look at the ADA, you're going to be looking at the line at which some information is okay to collect, but others isn't. And when you are taking your employees' health or your customers' health data, like you're not going to want to be tracking that anywhere. So as far as from a collection point of view, and that ties into privacy rights. So in general, we're still
with the app. Isn't there an app you're supposed to use? And isn't that collecting it if you're using an app?
Well, and so it's yeah. So if you have the county app that people are supposed to use, but the employer itself shouldn't be filing this away in a cupboard or something, right? So it's it's just this weird interplay of laws, and we'll see what happens through time. But it's just another thing for folks to be aware of.
A big part of this.
Sorry. Hello?
You're up. Go.
I was under the impression this whole time that employers were supposed to be keeping this information so that way if a customer had gotten sick and they go and say, I got sick at your place of business, the owner could pull that out and say, no, look, none of my employees have been sick. Look, we've been keeping records. So you're saying not to keep those records?
I'm saying that you need to be specific as to the type of business. So for example, when you go to a dental office, they give you a whiteboard and you answer the questions so that you're letting the business know, no, I don't have a temperature, and they'll take it. And then you're answering the other health questions, but then they erase that information. But the dental office will still have a record that they've been doing that, right? But they aren't collecting the private health information of the customer. And then when it comes to the employees have rights. So, to limit their return to work because of potential COVID exposure or antibody testing, now with the ADA, there are things to say you cannot really require an employee to do antibody testing. So, it depends on the type of position, but there is kind of this hesitation out there. And this is a newish thing. I think in general, with the first wave of what we've experienced is that, we're like, oh, get information. Let's make customers feel safe. Let's let employees feel safe. But, this is a bit of a word of caution to employers, to make sure they have their employment counsel on hand to help them navigate this new terrain. And then the other thing I want to talk about, shifting gears, is that in California, we have a new relaxing of regulations as it comes to salons, thank goodness. So last week they were closed, and this week they've been allowed to reopen, but in an outside setting. And there's a regulatory component that had to be changed in order for this to happen, as our Business and Professions Code traditionally, requires salons to be occurring inside a licensed establishment. So that doesn't really allow for outdoor services. And so we have the governor who's actually saying, no, now salons can go and do it outside. And the interesting thing is that, of many, is that there's been some backlash from the lobbying groups that represent salons by saying, this is really BS. Salons should be able to operate indoors, and that those lobbying groups are pointing to research where they've actually tracked COVID being in a salon and how it has not spread between the clinician and the customer. So it's, for now, yay, at least salons can reopen if they're outside, but we'll be looking for further movement in the weeks to come to see if these lobbying efforts are successful to allow salons to actually operate inside as well. So that's your legal wrap for this week.
It's interesting. I've been kind of following the stimulus package or the derivatives of it that are going through Congress right now. And a big proponent or part of that is a hold harmless piece with COVID. Like if you accept any funds, you have to hold harmless, which would be interesting, right? And I think the Republicans are pushing pretty heavily for this to mitigate some of the liability of COVID. Because I think that, brings a lot of concern to any aware or conscientious business owner. It's not just, hey, get back to work and go to work. It's if I let people go back to work, what's the liability of this? And, weighing the risks versus just saying, look, I'm going to hang back and not go fully operational yet until we have some of this worked out. So I think that'd be an important part of the legislation. And I could argue that one both ways, but at least holding people harmless so companies can get back to work would probably be a positive thing.
Well, I think we'd have to dive into exactly from what, right? So this is the problem with operating in a regulatory society. And we have businesses who are now restaurants who are putting their tables out in park settings that has been, they've been able to do that. But there are questions there too, like, well, what if they have volunteers who staff that? So are those volunteers now subjecting the business to additional exposure? Like, I mean, it's not just the hold harmless because of a health issue with COVID. I mean, we've got so many other regulatory penalties that get triggered. I mean, Chelsie, your industry, like, with the showings, what happens if somebody leaves COVID in a house after they viewed it? I mean, I know you have the waivers, but, it's like, so I think this idea of holding harmless, while potentially it sounds good in theory, I think it needs to be really thought out. And, with how the government rolled out PPP fast and easy, I mean, I think like there needs to be some real thought into different wrinkles and how to make it work. So it's not just one little piece that's being held harmless, but it looks at the totality of what's going on right now.